Adaptit or Adapt IT, depends how you want to read it. I'll ask them how they say it. Today they announced their financial results for the year ended 30th of June this year, and they say they continue to deliver value and growth substantially above the average for the sector. The company reported an increase of 36% in headline earnings per share, and I'm joined now by the Adaptit CEO, Sbu Shabalala, and Tiffany Dunsden, Financial Director at the company. Tiffany, I'm going to start with you to look at the financials and then to Sbu with more of the strategic side. How do you pronounce the company?
Adapt IT, David.
Okay, so I wasn't sure, and now I've clarified it. I hope I don't forget.
No problem.
Now, you talk about quite good numbers here. 38% increase in turnover, 58% operating profit, 36% in headline earnings. Now, that, of course, is the key number. So these are good. Are there any funnies in here, low bases and things like that we have to think about?
No, David, there aren't. From a headline earnings per share growth rate on a compound annual growth rate over 5 years, that's 38%. So I think there's nothing funny in the base. It's just us pursuing the same strategy we have for some 8 years now, and really doing more of the same. The breakdown in the turnover growth is 9% organic growth and 29% acquisitive growth, and we continue on that strategy which we've been pursuing for a number of years now.
Sbu, on the one hand, as Tiffany says, the strategy is the same. On the other hand, you are doing some things differently. So you say you're remaining an industry-focused niche provider which grows turnover and profit. Well, that sounds like the sort of thing any company should do. Find its niche, grow turnover and profit. What are you doing that's producing these numbers?
We are looking at diversifying the business, and as a software business, our markets are international. So our strategy of diversifying the market outside of South Africa has paid dividends, particularly with the South African market growing at 0% this year. So we've driven growth of around 9% from our sales offshore, and we are now in 22 countries around Africa. And through our Mauritian international business drive, we've built the business outside of South Africa. So now over 27% of our business comes from outside of South Africa.
I'll come back to where the heart of the growth is, but Tiffany, we hear lots of stories about companies that have gone into other jurisdictions in Africa. They're all different. It's not one place in Africa. There are lots of them. And you hear stories about companies having difficulty getting their profits out. Nigeria and Angola are two of those. As financial director, you've got to oversee quite a complex range of reporting, transactions and so on.
Yes, David, we do. And we're quite conservative on that front. We obviously take advice from experts. We do have a little bit of exposure in Nigeria, where we're obviously battling to get our currency out. A small amount of exposure in Zimbabwe, but really we have typically pursued blue chip markets with blue chip customers and have had great success, albeit on slightly longer payment terms. We generally find that we receive our money in the end.
Is it all gone smoothly? I mean, you don't hit problems here and there?
No, we do hit glitches, and I think everybody would, but we navigate them and we try to resolve them as best we can. We really don't find too much bad debt, because the solutions that we're providing our customers with are really business critical solutions, and if they didn't pay us, they'd lose out on the continuity of their system.
So you do have a hold in that sense?
We do.
Sbu, give me an example of where you've gone to grow elsewhere in the continent, and tell me the story of how it's happened.
Yes, an example is in our energy business. We started off in the energy sector, focusing in supply chain management solutions for the downstream in oil and gas. And when we started looking at upstream, with the oil price being what it is, we decided to start looking into offshore markets. And to date, we are in the US, so in both North and South America. And we've grown our dollar revenues through that, where we have global support contracts for our solutions and global contracts with all majors.
Looking at the sectors you talk in, education, manufacturing, energy, financial services, that's quite a few sectors to specialize in. Yeah. Which is the most important for you at the moment?
Well, if I look at the contribution from all the sectors, they are actually on par. And we find with now 800 people at Adapt IT, we are broken down into those sectors, and we do have the specialization, particularly on the software side of those. But you know, some of the new sectors that we're looking at, financial services, we've seen a huge growth, a huge jump in this year in that. So, and we're seeking to get that to grow further.
Now, you're in a highly competitive sector here. So what are you doing? Is there an Adapt IT way that says we're doing things a bit differently?
I think the only thing we're doing is sticking to our knitting, which is basically providing functionally rich software with vertical market expertise, people from the industries who know in depth what the challenges of those industries are. So the products we provide and the services we provide are differentiated from what other service providers can offer. And I think that's what creates the stickiness of revenue and the value to the customer.
Sbu, these are hard times for the South African economy, although there's some signs that we might be past the worst, say, in commodities and that. But the growth prediction is like zero now. What worries you most? I mean, you've said that your growth also is zero in South Africa, but you can't stay there forever. What are you doing in South Africa to look at growth?
Well, our primary market remains South Africa, and I mean, we as a BE company at level 2 now, we believe that there's still opportunities in sectors that we're not involved in currently. However, the market in South Africa is consolidating, so there are like businesses that we're seeking to acquire into Adapt IT to grow to extend our services, and also look at taking those businesses through the platform that we've created, the international platform, to sell. So there's quite a lot of excitement in the South African market around consolidation, but you know, we also look at markets outside of South Africa.
As a CEO waking up in the morning, and you, Tiffany, can answer after him, what are the numbers you're looking at first in the morning? Because there's so much information to look at. What do you look at first? Couple of things just to check where they are. Numbers.
Well, obviously the currencies, you know the fundamentals of the different markets that we service, but what we really look at is where there are high growth markets, and particularly those high growth markets that are competitive. So we look at how we can, you know, attack sales in those numbers. We're now at 800 million sales. So we're looking to improve that quite substantially in the next few years.
So currency has helped you, presumably, with a weak rand?
It has.
Yeah.
It has certainly helped us a lot, and I think that it's a competitive advantage going into global markets off of the rand cost base. And we have very high quality solutions and services here, which we can export very successfully, and we've proven that. So I think we're on a very good wicket to do so there.
Great. That is Adapt IT. Adapt IT, that's right, I've got it. Yeah. CEO, Sbu Shabalala, and Tiffany Dunson. She is the Financial Director at Adapt IT.